Welcome to On the Go with Celico, the podcast where we introduce tips and techniques for job seekers in Southeast LA. And now here's your host, Margene Clemens.
Greetings, listening world, and welcome to On the Go with Celico, and today's episode where your host, Margene Clemens, will discuss tips for startups, businesses, that is, part 2, with Jim DeRosa, our SCORE OC mentor. Jim, in this second episode of Tips for Startups, please share with us what type of business structure should or could a startup choose?
Okay, sure. Thank you, Margene. Be happy to go into that. First of all, I want to say that if you're considering a business, the type of structure that you choose is very important. And I would say, since I am not an attorney, nor am I a CPA, that I would suggest that you take what I'm saying here and make sure that you speak with your CPA or attorney to finalize your business structure, because there are a lot of nuances to what I'm going to share with you now. All right. The first and simplest form of business structure is a sole proprietorship. That is where a person owns a business, runs it themselves, and they are personally liable for everything that happens. So, for example, most people that start out, and most businesses that start out, are sole proprietorships. Your business assets and your personal assets can be commingled. However, it's not recommended. It's recommended that if you have a business, you have a business checking account and you have a personal checking account. However, the way it's looked at when you file your taxes, they're all filed on the same tax form. You'll fill out a profit and loss statement. That'll go with your normal taxes on this. But here's the fundamental difference is a proprietorship or a sole proprietorship. Single person owns it. It's the simplest operation. You can be in business usually with city licenses. With under $200, you can be in business, especially if it's a home-based business. Very simple to do, very simple to operate. But keep in mind, too, that if anything goes wrong and you're ever sued, that the liability goes to you unlimited, in an unlimited fashion. Now, I will mention that in your business, you should have business liability insurance and product liability insurance, which should protect you. And most of the time, if you operate your business in an honest, ethical, and straightforward way, you will not have a lawsuit. But it's important to realize that in a sole proprietorship, there's unlimited personal liability. They don't see your business and your person separately. Okay?
Should people be scared of that?
I think the more assets you have, the more you should be concerned about that. Okay. I wouldn't be scared of it because most of the time you're not sued. And if you operate ethically and properly, it's fine. Most people, when they start out, if they don't have a lot of personal assets, and I'll give you my rule of what I think is enough to be concerned with, then it's not really a concern. As your business grows and becomes more profitable and you gain more personal assets, then one of these other business forms, more like one of the forms of a corporation, is better for you. So a partnership is much like a proprietorship. There's two or more people, operate the business, right? They share in the profits and they share in the liability. Most partnerships, not all of them, but most partnerships, the liability goes to the partners, just like in a proprietorship. And there are some nuances to that when you get to corporations and so forth. But basically, you have a sole proprietorship, one, a partnership, more than one. And I have some more things to say about partnerships in one of our other talks, because this is an area of great concern to me, how you form the partnership, whom you're in partnership with, and so forth.
Okay, great. Okay?
Great. All right. And then the last thing is a corporation. There are many types of corporation. The C, or standard corporation. You have a subchapter S corporation, where the profits of the corporation are taxed and passed on to you personally. And then you have the LLC, the limited liability corporation, which is very popular in California right now. And that allows you to have the protection of a corporation, and then you're taxed usually at the individual level if you make an S corporation declaration. So again, the basic difference between corporations and proprietorships is that the corporation is an entity in itself, separate from you. In a sole proprietorship and most partnerships, if you're sued, there's unlimited personal liability. In a corporation, one of the various forms, C, subchapter S, or LLC, if you're sued, the liability ends with whatever you've invested in the company. They can't come after you personally.
Oh, okay.
And so what I've generally said, and this again is just my rule of thumb, is if you have over $50,000 of net personal worth, either in your home, your car, other assets after you subtract your liabilities, you should probably think about forming one of the forms of corporation. In California, the most common one these days for small businesses is a limited liability company. Okay? So you can form this corporation. It's easy to run. I do recommend you get some legal counsel on setting it up. Okay, there's you have to pay a minimum tax to the state of California every year of $800, which is suspended for the first year of a new corporation. Okay, but some people would look at that, and I would look at that as that's insurance.
Oh, okay.
Because if you pay that every year, you have the protection of a corporation. That means if there are any lawsuits that go beyond whatever insurance you have, they don't come after you personally, you're protected. So generally, if you have a business, okay, and you have assets over $50,000, I recommend you form a corporation.
Okay. And then those personal assets are totally separate from the corporate assets.
They are.
Okay.
So whenever even a sole proprietorship, even though those assets are viewed together, you should always have a separate personal checking account and a separate business. You'd always keep these separate so you can understand what actually occurred in business, what actually occurred in personal. However, in the form of a corporation, they absolutely must be separate. Okay. And that avoids any commingling and mismanagement, or that helps to minimize that type of a thing. All right, so those are the three types: sole proprietorship, partnership, and corporation. And the key thing here is what level of protection for your personal assets do you need? Okay, and if it's over $50,000, I recommend one of the forms of the corporation. California, one of the most popular, is a limited liability company.
Okay. Is there anything people should know more about the LLC? Like, I did not know about the $800 tax.
Right.
I'm not an LLC, so I didn't really have to know, but I didn't know about that. And, well, I have a child who has an LLC, and I'm thinking, did she know she has an $800 tax that's due?
Right. Well, she'll find out soon enough. There's a minimum. That's the minimum amount you're going to pay. And then most of the profits pass through in the form of what's called a K-1, like in a partnership, they pass through to you, and then they're paid through your normal income tax, okay? You should also realize that an LLC is the simplest form of a corporation. For example, a C corporation requires you to have an annual meeting, requires you to have a variety of corporate records kept up to date, so forth. An LLC is much less formal. You don't have to have the annual meeting, although we recommend it, even if it's a meeting with yourself. You don't need that. So the formalities are very, very minimal, and the protection is there. Okay. But the state does require for all corporations this minimum fee that they get every year. And other than that, having it set up properly, I would recommend an attorney setting this up. It usually between $1,500 and $2,000 to set these up. That's my understanding. People use LegalZoom, and it's $500 or $600. I think it's worth the extra money to have a professional handle this for you, set it up right, make sure you get an S-Corp tax declaration so you're paying taxes individually. The pass-through goes to you individually and so forth. So it's actually the simplest form, offers a great deal of protection, okay, easy to manage, with the caveat there's an annual fee that the state wants for the privilege. All right?
Always. Okay. Well, in addition, can you tell new business owners, well, you've listed 3 different types of structures that you need to choose from: sole proprietorship, corporation, and partnership. Mm-hmm. So in addition to that information, can you tell business owners the maybe benefits and the pitfalls of choosing a partnership?
Sure. I'd be happy to. I should also mention that you can have a partnership that's like a sole proprietorship, where the 2 partners have unlimited liability, personal liability, and then you can have a partnership within an LLC. For example, if you have an LLC and you form it with another partner, you in essence have a partnership, and you're treated under the tax laws the same way as a partnership. The benefit, though, in an LLC is that you are both protected.
Right.
Okay, from
Right.
personal lawsuits, okay, against
Right.
your personal assets.
Right.
All right, now, I've had a lot of experience in the partnership arena. I entered business as in my 20s in partnership with my mother and father, and it was I had no idea what to expect, and I was very fortunate because it worked, and I'm going to explain why it worked. And then when my mom and dad turned the business over to me and retired, I brought a partner in as well. And that was a 20-year plus relationship, and that ended well. But I want to tell you, Margene, that that is the exception, not the rule.
I know.
Most partnerships don't end well.
Yes.
So here's what I've learned over time. Partnerships need shared values. And when I say shared values, that means that the partners need to be on the same page, their beliefs, their ideals, their work ethic. I can't tell you how many times people have come to me and say, our partnership's not working. I'm doing all the work and they're not carrying their share of the load. We're 50-50 partners. I'm doing 90% of the work. Major complaint. Okay. So personal values, beliefs. One partner says, no, I believe this way and we're going to pay our taxes. We're going to treat our employees right. Another one would say, well, we can cut corners here. We can do this. We don't have to do this. So what happens is you get into these arguments. So it's important that if you're going to be in partnership, you have shared values. So in my case, my parents and I had shared values. They brought me up. So, we had the same values. We trusted, and trust is real important there too. We trusted each other. My partner that I brought in, we had very similar religious values. We had similar outlooks on life. And he also had a strong work ethic like I did. And it worked out. Okay. But this is where most of the problems occur. It's they don't have the shared values. They sound like they have shared values, but once you dial it down and you realize, wait a minute, this person behaves differently than I do in these critical areas, be wary of forming a partnership with them. Okay.
Well, that brings me to kind of think, how do you make sure that you have these shared values? If you've known somebody for a year or two or sometimes 10, you think you really know somebody,
right?
But you can often get into business, not just business, but sometimes other situations and find out, well, I didn't really know this person. So do you have any hints or tricks about
I would say
how to make that happen?
Partnership is like what we say in the business. A partnership is like marriage, but without the good stuff. And most people that have marriages that don't work they look back and they say, you know what, I saw that and I overlooked it about that person. I saw that and I overlooked it. I saw that and I overlooked it. So I'm just saying, try to be as brutally honest as you can and don't overlook this stuff. Get it out on the table. Talk about it. But I can tell you, for example, I've had several friends that I enjoyed their company socially, but would never be in business with them, okay, because of what they revealed to me on a social level, where they were, morally, where they were, what their values were, their work ethic, or some other area. I knew I didn't want to be in business with a person like that. So I would say be observant, okay, and then get it out on the table and be honest about it. And if in doubt, don't go down that road. So you need shared values, but Margene, equally important, you need different work and different skill sets. Okay.
That's interesting. I hadn't thought about that before.
I didn't think about it either.
Really
so in my 20s, when I went in business with my mother and father, I had no idea about any of this. I was lucky. All I was hoping was that they would treat me as an adult and not as a kid, and they did, and they gave me the respect. But what I learned after being in business was, Mom was good in the accounting, Dad was good in sales, and I had, unbeknown to me at the time, I was good in operations and running the operation and doing the buying and organizing. And so we each had a place. Bailiwick is sometimes called. So when I went to work, I had a job and a place and importance. My dad had his, Mom had hers. And so we each had an area we could flourish.
Yeah, you had your roles and responsibilities, and you knew what they were.
We did.
Yeah.
So the other thing about a partner besides shared values is make sure you have different skill sets.
Wow.
Somebody's got to do the accounting and finance, or at least hire the people to do it. Somebody has to handle operations. Somebody has to do marketing to bring the business in. And if people have the same skill sets, what happens is there's not enough work for them to do. They end up fighting over what they want to do, and these other things get neglected. So this is over time. So when Mom and Dad turned the business over to me, and I brought in a partner, again, I didn't know what I was looking for. But this individual had a skill set that was different than mine. He had very good relational skills. And so he became my general manager, and he had the ability to work with other people very well and bring them together. I had the ability to organize. And so our skill sets were complementary. And because of that, it worked well.
But it so makes sense, but I don't think it's something people really think about.
Right. Right. So those are real important. So shared values and different skill sets, okay, are critical. Now, what are the benefits of a partnership? Well, first of all, I mean, most of the time, work gets done cooperatively in teams. We can't do everything ourselves. So if we have a partner, that partner can share in the work with us. They can share in the risk with us. They can share in the rewards with us. They can be someone to work with and talk to and build up. As it says, if two walk along and one falls, the other can pick him up. Elsewhere it says, if a cord of two strands, even three, is not easily broken. So when people working together and teamwork, tremendous benefits can come from that. My partner and I in business, we used to work, he'd work 6 days and then 5 days. And we would alternate on Saturdays. We were in the retail business at the time. And so he'd work this Saturday, the next Saturday I'd work, and we took turns doing that. We shared in that, right? So he had more time with his family. So 2 Saturdays a week, I was home with my family. 2 Saturdays a week, he was home with his family. See, partners can do things like that, right?
Great balance.
Very important. Okay, pitfalls. Disputes. If you're having an argument with if example, not shared values or not skill sets that are different and complementary, you can end up in disputes. And so these disputes spill over. It creates a toxic environment. People that are working there get very upset when the owners aren't getting along. And so they inadvertently create a toxic work environment. People don't like to work, don't work well in those kinds of environments.
Customers don't want to be there either.
They don't. And then that leads to dissolution. And dissolution is expensive. And then dissolving a company, allowing it to fail, or fighting so much that you can't focus on the important things in business. These are the risks, okay? But like everything else, you have to ask yourself, okay, what do I want to do? If you can do it yourself, do it yourself as a proprietor or as a sole owner. If you need help, and as you grow, you will need help, consider a partner, but be very wary that you bring in the right partner, that they believe the things that you believe in. They share the work ethic that you share, and that they have different and complementary work skills. Then your chances of success are much greater.
And success is definitely what we want as business owners. Wow, Jim, this has been so helpful. I am sure that startup businesses really appreciate some information and clarification on the sole proprietorship, partnership, and corporation, because sometimes those are things that just get blended and we really don't know the difference before we make a start. And then to understand the pitfalls and the benefits of partnership is also extremely important. And I hope everybody learned something new. I did. I had never thought about the different skill sets. And I had thought about the benefits, thinking it's more fun to do it as a partner. Hadn't really thought about really making sure you have those same shared beliefs and values and work ethic. And then the pitfalls. I know that far too often partnerships do fall apart because of those pitfalls and not doing your upfront work, I guess, making sure that you've covered all those bases and really understand what can
and honestly
happen.
Looking at the other person and asking, will there be a net gain here? Will this person be the kind of person I can be in business with? And can I, like in a marriage, Is this somebody that I can partner with and stand side by side and work every day with, and have the same beliefs and values, the central, not everything, but the central things there, right? And will their skills be complementary? Will they help offset what I'm weak in? That's where partners are
exactly
wonderful.
Right, because we're all weak in something, and we all need
Absolutely.
someone else that stands next to us that's strong in that area that we're weak. I liked how you used the analogy of, like in a courtship, you think you're getting to know somebody, but you saw red flags and you just passed right over them. You looked right over them because you wanted it to work.
That's what we do.
Yes,
Unfortunately.
and we do that in life, and obviously we do that in business too. So thank you so much, Jim. And again,
my pleasure.
Listeners, you can talk with Jim every other Thursday here at Celico Web, and all you have to do is come in to Celico Web, and you can come to the Business Resource Connection and schedule an appointment to meet with Jim every other Thursday. Thank you again, Jim, and thank you, listeners.
You're welcome.
Thank you for listening to On the Go with Celico. If you've enjoyed the episode, please subscribe to the podcast on iTunes. You can also download our app, available for free on Google Play and the Mac App Store. Thank you for listening, and we'll be back soon with a new episode.